Extensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting it down to the closing bell. And here they'll take us beyond the bell. It's a global simulcast. We're joined once again by Tim Stenovic and his sidekick, Carol Masser. Welcome to our audiences across our Bloomberg platform, television, radio, as well as those folks streaming us on YouTube.
Sidekick. I'm honored to be his sidekick. What do you want? You know, it's kind of an interesting day, right? A little bit of a break from some of the enthusiasm that we've seen. Although I'm looking at equities, I'm looking at the S&P maybe at its best levels of the day. Having said that, did you guys see what's going on with Bitcoin?
Yes.
Yeah, on fire.
Unbelievable. Hitting 42,000, right? The last time we saw that was what, April of 2022, I think. And it's up about 152% year to date. I mean, crypto, still not, Bitcoin specifically at its highs that we've seen, but definitely quite a bounce back.
There's kind of some weird mixed signals happening here. Like there's the euphoria of crypto with Bitcoin hitting a high that it hasn't seen in months, Scarlett. There's also gold moving, higher and also lower on the day today.
Safe havens. Both of them, safe havens.
But it's kind of strange given the way that people are talking about, the relative strength of the economy, what we've seen in the equity market over the last 5 weeks, and what they expect the Fed to do early next year.
And then you've got the Russell 2000 continuing its outperformance. I'm just looking at volume. And yes, volume is higher for the big caps, but it's much, much higher for the Russell 2000, 28% above the 20-day average. Volume in the NASDAQ 100, for instance, about 50% above the 20-day average, but it's to the downside.
Yeah, and which point out, this is 4 straight days where we've had outperformance of the Russell versus the broader markets. And I was taking a look at the differential between that and the NASDAQ 100 here. 1, 2, 3, 4, 5. This is something like the 6th best outperformance of the year. I'll double check that number here, but this is a meaningful outperformance, not just something willy-nilly here. You take a look at the numbers on your screen, right across the 3 biggest averages here in the U.S. with the Dow down 0.1%, the S&P down 0.5%, and the NASDAQ composite down 0.8%. But you switch that camera around and take a look at the Russell 2000, 19 points higher. That's about 1% here on the day. We saw similar moves on the S&P 400 mid-caps and a slightly smaller move, but still to the upside on Dow Transport.
All right, since we're spending so much time on the Russell, so let's go there. You've got 1,416 names in the Russell 2000 higher today, 511 to the downside, 40 unchanged. So you do see increasingly, Scarlett,
Did you
investors.
count those individually by yourself?
I did. Fingers and toes.
She uses the Bloomberg to great effect. All right, let's take a look at the sector performances. You mentioned the Dow Transports Romaine. You can see transportation stocks at the top of the pile. They're gaining 0.7%. The exception there is Alaska Air, Real Estate Investment Trust, and Consumer Durable and Apparel also gaining about 0.5%. On the downside, that's where you've got the big tech names. Chip companies, media and entertainment, that's Netflix, that's Alphabet, and software and services all down by at least 1.33%.
All right, guys, individual gainers. Speaking of the Russell 2000, the top gainer in the Russell 2000 is Hawaiian Holdings. Shares soaring up 192%. We all know the story. Alaska Air agreeing to buy the company $1.9 billion. It's a cash and debt deal. And there is some investor concern about regulatory hurdles. We just talked with our George Ferguson, though. He doesn't necessarily see it. So we'll see ultimately if this deal gets done. Got to mention Spotify up about 7.5%, finishing off its best levels of the session. But nothing like job cuts to get a stock soaring. Looking to cut about 1,500 jobs. That works out to about 17% of the company's workforce. It's the company's steepest cuts yet this year. They're looking to cut back on their costs and also drive some profitability. So again, Spotify, an outperformer, up 7.5%. Beyond, it is the newly renamed Bed Bath & Beyond.
Yeah, this is very confusing. Because when I saw this ticker last week, and I thought it was Beyond Meat.
I did too.
And then I forgot that Overstock
we were talking about
rebranded it.
throwing some plant-based stuff on the
maybe they should combine.
Maybe. Yeah, get some towels and get some meat. There you go. Beyond, you might remember, I don't even know. I know.
It's plant-based.
All right, it's plant-based stuff. It was late October that they officially changed the company name to Beyond. November 6th, remember, CEO was stepping down at the request of the board. That's never great. And then November 29th, headlines about the new board co-chairs and how company leadership mandated an intense restructuring and it had begun taking decisive actions to do so. Nonetheless, this company, they announced record sales performance for the Cyber 5 holiday period, details of a restructuring plan. Stock is up for its 7th straight day. It has gained nearly 40% since November 22nd, so quite an outperformer. This one, too, it's a small cap biotech. There's lots going on in biotech. Tech continues to be so. iPoint Pharmaceuticals more than doubling in today's session. Check it out, everybody. Up 177%, jumping the most in about 19 years. Heavy volume, saying its mid-stage trial of its investigative therapy for eye diseases met all primary and secondary endpoints. Cantor calls the data a home run. An honorable mention, I don't know if we're going to bring it up, but Uber Technologies up. It's going to be added to the S&P 500 on December 18th. So
wow. A lot of gainers on a day
lot
when,
of stuff to choose from.
we saw a lot of red on the
You have
major
five,
indices.
Tim?
No, I only have 3.
4 and an honorable mention.
I'm not what you call an overachiever, okay? Let's go to the decliners. I do want to start with Alaska Airlines
for
Group.
everyone.
It's the worst performer on a percentage basis in the S&P 500, closing down more than 14%. We know the news today. Alaska agreed to buy Hawaii Holdings for $1.9 billion in cash and debt. As Carol mentioned, we did get to speak to George Ferguson over at Bloomberg Intelligence a little earlier. He's kind of a head scratcher in terms of what Alaska gets, although he did add that it gets some connectivity inter-island when it buys the rival. And then also it increases Alaska's international routes with connections to Asia. But at the same time, it also gets challenges that Hawaiian Airlines has faced. Engines of some of the planes have to be removed for servicing, which takes the planes out of rotation and more. Also wanted to get to shares of NVIDIA, among the worst performers on a per points basis in the S&P 500 today, down 2.7%. Not a ton of news. I mean, the stock is up more than 200% so far this year. But we did learn that NVIDIA executives and directors sold or filed paperwork showing that they intend to sell about $180 million worth of stock. If all the shares were sold, Romain, it would be the biggest monthly disposal by dollar value this is in 6 years, this according to the Washington service. And then finally, just an honorable mention for Starbucks, shares down for an 11th day in a row here. Look at this, 1.6% as a decline. Longest losing streak since the 1992 IPO. It's fallen 9%.
So I looked into this because I saw last week, I was looking at that streak and there was no news, but it does appear to be some analysts have come out and said they have to have some concerns about a slowdown in growth.
Yeah, cooling sales is what I saw.
Cooling sale, and they mentioned like alternative data. So who knows whether it's real or not, but certainly investors are kind of bailing on it.
It's a momentum trade at this point.
Yeah. Interesting too, kind of investors, at least for one day, bailing on that Treasury rally where we saw prices actually move higher, which pushed yields down pretty significantly over the past couple of weeks. That's put on pause here for this day in a pretty big way. A significant sell-off that we saw today to push yields higher on the 2-year yield up by about 9 basis points, and a similar move on the 5-year. On the longer end of the curve, not so dramatic, but it really is kind of the setup heading into this week, a week where we're going to get a lot of economic data that may potentially ratify a lot of these bets on rate cuts heading into 2024, or maybe it throws cold water on those rate cut bets.
Maybe people are closing out the positions to bid up Bitcoin. Who knows? Pushing it above 40,000, 41,000, 42,000. Not sure where it goes next from here, but it definitely, there's a FOMO, stain on it.
I thought what was interesting is Mike McKee, I think, was on with maybe you guys on television earlier and just talking about specifically how we're finally going to start getting November data, right? So it's a little bit more relevant to this quarter, certainly, and trying to give us an idea of just maybe some forward-looking trends, if you will. But all of this jobs data, it'll be interesting to see what jolts. I think he said it was still going to be up near that 9 million mark, so still kind of showing some strength. But whether or not what we get on Friday ultimately shows that we continue to see some softness in the labor market and some softening data, not necessarily falling off a cliff.
You guys are speaking to Katie Kaminsky a little later on the program, right?
Yes.
Will you do me a favor and ask her if she's sticking to that 6% call in the 10-year? She was early to that, on our program months ago. And, we hit 5%. But a lot of analysts are saying, okay, well, we kind of hit peak rates, at least on the 10-year.
Yeah, it seems to be the narrative, but I guess it gets to this idea, and I'm glad you bring up the November data, or at least Mike McKee brought it up, because it gets to this idea, too, that when everyone saw that momentum coming out of the third quarter into September, there was this idea that, okay, you have to have a drop-off in November. So I guess the question is, are we going to start to see that in some of the data that we got this week? Or if it does show resiliency here, does that then add fuel to this fire that, maybe that soft landing is in the cards? We spoke with Chris. I know you keep tabs, Tim, on all of our guests, but we spoke with Chris Ailman just a little while ago. He's kind of in that soft landing camp right now as well.
But there's also the alternative of that, which is if we do see strength and resiliency, does it mean that the Fed has more work to do to actually bring the economy to a place where it does cool down?
I feel like the Fed is kicking up its heels right now and basically saying, hey, the market's doing all our work for us. But maybe it gets back to the idea, too, and I know we're going to have this conversation ad nauseum next year, about the transitory nature of some of the inflationary pressures and whether they truly were transitory this whole time and whether what the Fed actually did had any real material impact in bringing that down.
I also do wonder as things come down, right? They always say it's much more difficult, right, when you're in terms of those last few stages of getting inflation down. But I also do wonder when things start to kind of come undone, how quickly it starts to come undone and kind of plummet with it, whether it's economic growth or so on. So I guess I still feel like we're coming out of the pandemic. We don't quite know. I mean, could it possibly be that we get this very soft
Coming out of the
landing?
pandemic?
Well, there's
You know
a
what
lot
I
of
mean,
one-offs
but,
where,
but I still feel like there's still a lot of money sloshing around in terms of infrastructure spending and some of the bills that came out of Congress. So I just do wonder. I don't know.
you know, I was looking at the Atlanta Fed GDP now. It's now forecasting 1.186%. That was from what, a 5 handle in the
Yeah.
third quarter?
Well, we'll get those
but-
economic
But
projections.
what was it at
next
the
week.
start of the year? It was like negative, right? I mean, everyone's like, 2% growth for the U.S. economy. That's good, right?
It's better than
It's just that dramatic
down
slowdown you're
2%.
talking about.
Yeah, exactly. I mean, I know people want to parse every little thing, but
All
anything
right,
else, Carol?
this
I think we have
sidekick
to
has
go.
to go. All right, we will see you tomorrow. That'll do for our cross-platform coverage. Radio
Are you
TV.
both going to be here tomorrow? Or just
Yeah, we'll both be here. Don't worry. We'll be here.
Oh man, radio, TV, YouTube, Bloomberg Originals, Beyond the Bell, folks. We will see you tomorrow.